Let's find out from our chartists what they make of the market moves. Narendra Solanki is on the show with us. We also have Sharan Lillaney joining in on the studios. Sharan, hi, afternoon. Let me start off with you. Still quiet on the index. Do you still maintain the view that it's time to profit take?
So yeah, Aisha, my view hasn't changed. There's nothing changed. You are seeing very immediate sector rotation every day. FMCG is up one day, it's down the next. Today, realty is up. Maybe it'll be down tomorrow. As my top pick was IT yesterday, it was down. Now it's up today. So you are seeing very fast sector rotation. I think it's on back of profit booking. Even with a small profit, I think people are just getting off and entering new sectors. So my view for Nifty is the same. I think view is downwards to a sideways consolidation. It can see around 25,300 to 250 levels. And what I'm hearing, I think there can be a trade deal by today or tomorrow. And if that happens, it'll be a very positive thing for the market. And if the market starts trading about 25,600 on a daily closing basis, even for an hour be towards the positive side. But for now, till now, I think the trend remains down sideways to downward to around 25,300.
All right, so that's the take on the markets. Let's watch out for that. A range-bound trading session is what we have seen as of now. But with this, let's also welcome on Narendra Solanki. Narendra, good afternoon. Good to be speaking with you. Firstly, help us with your sense on the markets. It's been quite a range-bound trading session for the past couple of days now. But any sector that is looking good to you right now? Because a lot of sector churning is also at play.
Yeah, good afternoon. Yeah, definitely markets after giving a tremendous rally last month, this month we have seen some kind of a profit booking, and also since we are almost at the cusp of start of earnings season, and from tomorrow onwards the earnings would be starting. So I think markets are waiting for earnings seasons to start, and also markets are also waiting for trade deals to get over. So I think these two events would be further deciding the directions of the market and would be aiding the market in taking on further building on the trends, whatever the earnings comes for the overall markets. But having said that, I think not much have been changed in terms of sectoral preferences for us right now. Still, we like domestic focused manufacturing companies, infrastructure plays. Lately, we have started liking some real estate companies and defense, electronics manufacturing, production linked incentive kind of stocks, EMS stocks. So these continue to remain our favorite topics. And whenever the opportunity arises in terms of buying on declines, we tend to recommend our clients to grab those opportunities for medium to long term. So this is all broadly on a sector specific. And coming to the FMCG and consumption space, I think things are gradually picking up with inflation coming down, monsoons looking good, and then Rabi season seems to be coming quite good. So I think festive season would be a big relief for the FMCG and consumption stocks. So one can start building a position in this space as well, looking for that kind of time period. So I think overall domestic economic environment looks pretty much in shape right now.
Okay, and Narendra, just taking that point a little bit ahead and talking more about FMCG, the kind of quarter-one updates we've received, and not only FMCG, if you take the broader consumption basket, barring Titan, nothing has been largely negative. It's all either in line or better versus what the street was estimating. What do you think FMCG in quarter one? What are those earnings going to look like? How do you think the sector could fare?
I think quarter one largely would be broadly in line. I don't see much surprise even on the positive sides, but I think negatives would not be there because the cost pressures would be easing out for most of the companies. So the margins would be stabilizing from here onwards. So I see FMCG companies' earnings improving from Q2 and most prominently in the second half of the current fiscal year.
Right, okay, that's the update coming in on Titan right now. Just looking at the texture of the market, like we said, at an index level, it's not a whole lot really, but lots happening within that. Snehi was just flagging off Titan's quarterly numbers. This Kotak Bank also reacting positively to the quarterly updates coming in. Antique has initiated a buy on AMCs, HDFC AMC, NAM India, UTI AMC. They're all the ones which are holding out well as well. In fact, they've talked about as to how the SIPS drive is going to lead to the structural shift in savings. And these three companies, according to them, are ripe for a re-rating, and earnings may see strong sequential recovery, according to them. Kunal as well joins in on the show. Kunal, hi, afternoon. What is it that you're making of this yet another range-bound session, and very quiet one at that?
Yeah, quite one, but today there's a change, Aisha, and I think many of the stocks have started to show signs of a good volume traction. For example, you've seen the banking names, you've seen a few of the financial stocks, sectors and stocks which we were discussing over the last few days. IT, there's been some pickup of price action which has come back into the real estate pack. Mild bit of short covering which is evident into few sectors. So that indicates that over the last few days, the markets were going through a bit of a grind. There was reduction of positions, but today it seems like that maybe the stance is changing a little bit more for individual stocks. Now, if that trickles into some sector trends, say over the next 1 or 2 days, then I think we could be in for a much more decent recovery for the index going forward. The strength in the banks over the last couple of days has been quite formidable, and this indicates that if the markets have to bottom out and show signs of recovery, or the sectors picking up trend, then I think Bank Nifty could be the one which could be the leading sector.
All right, that'll be interesting to watch out for. Interesting take rather coming in on the markets. But in some of the other movers today, I can see Delivery. That stock is up around 2.5% in trade right now. And I do remember it clearly back then when the company did come out with its earnings. It was indeed a very good set, especially on the margin front. But this time, all eyes on the earnings as well as how the e-com integration will actually take place and the synergies benefit kicking in. The commentary on that will be the key to watch out for. But Narendra, any take on this counter? Because when it comes to logistics, we have very select players, and Delivery as a stock mover, look at the move from almost like 250 odd levels back in April. It's now almost 400 rupees. Any take on this counter? Where's the stock headed? What's the outlook?
Yeah, first of all, I would like to disclose we do not have any recommendation on the stock. Having said that, I think the operational challenges continues to remain, and I think we should wait for a few more quarters in order to take a call on this. So I think it's better to wait and to have a wait and watch kind of approach for this.
That's a wait and watch, but just Sharan, if you can help us with a chart check on this one, because I can see that during the month of May, very good volumes is what we have seen. But with this sort of a move, do you still believe that the stock can rally more, or is it the time to halt now?
No, Shishti, looking at the chart price action, I think it's very strong, higher high, higher lows. It's trading above all its moving average. I think in the next couple of days, the 100-day DMA is going to cut the 200-day DMA on a positive side. Again, a very positive crossover. So I think the stock has enough legs to reach 450 to 460 levels. If anyone has a position, I would suggest a hold rating on the stock. But definitely put a stop loss of around 380 on a daily closing basis. If it closes below that, you can review it in the coming 2-3 weeks. But looking at the price action currently, it's very strong. You can reach targets of around 450 to 460.
Okay, that's that on Delivery. Just looking at some of the other buzzers as well in trade. And what's really been cracking hard today is some of the capital market plays. Look at a BSE, for instance. That's down about almost 7% right now in trade. That's where BSE futures are headed. Angel One is down about 4.5%. Even names like an MCX are slashed by about almost 4% as we speak right now. That's Motilal Oswal as well. That's the other stock which is in focus. CDSL. The entire pack is looking a little bit beleaguered, as we just highlighted. Other than that, pharma is the other pocket that one should flag off right now. DRL 2.5% is the cut coming in there. You've got most other movers. Oro Pharma, look at the move on that one as well, down about almost 3.5%. But some of the mid-cap plays, interestingly, like an Ipca Labs, etc., are the ones which are holding out. Kunal, what's your observation within pharma right now?
So I think it started off with very select stocks which did well. I think you had Glenmark Pharma, which was one of the strongest one. Then it started to move into the other stocks. For example, Sun Pharma showing some signs of recovery, but it's still a lot more staggered. I think you just have few odd names which are showing signs of consistent volume breakout, and that's why the money is being money is chasing only very few specific names. You look at the other set of stocks, Aurobindo Pharma, Lupin, Cipla. I think these stocks are still showing signs of a struggle. It's more like a flatlined move for these stocks over the last 4 to 5 months, and these stocks have been hovering at a pivot, with a plus minus 5% kind of a range broadly for themselves. So that indicates that we are not looking at a major pickup on the large cap pharma stocks. But I think on the individual pharma stocks, the move in the likes of Glenmark Pharma, for example, in the last 2-3 months, the stock picking up from I think 1450, 1500 as a base to 1850 mark, which it tested yesterday. Biocon is something which has done quite well from those 325, 330 levels to now almost 370, 380 zones. So there are very few specific pharma stocks which is looking attractive. And I think that's broadly also the move which has been happening across many sectors. It's not as if that all stocks or majority of the stocks have participated in this last 500, 700 point of index uptick. So I think that's how the texture of the markets are, very selective in terms of individual sectors as well as pharma.
Okay, so that's the take on the overall market breadth and Nifty Pharma, and some of the stocks from the pharma pack that have been doing well is what Kunal has just flagged off for us. But Narendra, coming to you once again, give us your sense on the real estate updates that we've received yesterday. In line largely from Sobha and Macrotech, you have good set coming in from Phoenix, but there are no major disappointments that we've seen anywhere. This is unlike the story that we had seen just 1 quarter ago. Do you believe that it's now a turnaround time for real estate where we can see volumes meaningfully picking up?
I think definitely things should pick it up from here, especially in tier 1 and tier 2 cities. Also, the fact that the interest rates have come down significantly, and the overall economy is also expected to pick up in this second half of the current year. So I think all the things are in place for the real estate markets to show good performance. And if we see for the players like DLF, they are able to sell premium properties. So I think the other players should also see pick up in the performance, and the new launches, pre-bookings, I think should not see any major headwinds right now going ahead for the sector.
Okay, that's the take coming in on the entire part today. I think after a hiatus of about almost 3 odd trading sessions, or rather has been buzzing for them from the last 3 trading sessions, the index has managed to gain about 2% in the last 3 days, and this in an otherwise very, very quiet market. Sharan, what are your spots if you're identifying any within realty?
So I've seen a reversal in Prestige, DLF, Oberoi, and this one, Brigade. These 4 are looking very decent. They are showing signs of reversal, but on very small volume. If you see, volumes on the downside are quite high compared to volumes on the upside. So I will still wait for a confirmation. Given the fact that realty is a very high beta sector, any downside in Nifty can take this sector even further towards the downside. So I would still wait for a confirmation in all these stocks, and once the confirmation comes, maybe in the next 2-3 days, we can look to adding position in these names.
All right, so that's the take coming in on the realty pack. Let's watch out for that. But today, in some of the other newsmakers today, we also have some of the cement counters that are also buzzing. No significant news flow rather, but the good stock action is what we are spotting. Case in point being Grasim, Ultratech Cement. These stocks are showing momentum. Kunal, anything on the charts that you like at this point in time?
Yeah, I think Grasim could be a very good, sort of a contra bet. After the last, I think 5 days or 6 days of a price correction, the stock starts to look fairly attractive. And I think at current zone where the stock is trading around 2800 mark, it's also bounced back from its, short-term moving averages. And we look at the previous, almost 1 month of a price uptrend for Grasim. The stock bottoming out earlier at 2650 thereabouts. In terms of a minor swing low, moving up higher, making a pattern of higher highs and higher lows. So when we look at the setup over the last 1 or 2 months, it's been positive. When we look at this over the last 4 to 5 days, the price levels have come towards a very attractive price terrain. And we expect generally that if a price or the trend of the price continues, then I think risk reward starts to look attractive at a certain point of time when the price retraces back and comes back towards a mean reversion zone. I think Grasim seems to have entered into that kind of a territory. That's why I would believe at current levels, the risk reward would be extremely favorable. Would look out for 2900, 2950 as a swing target for the stock with the very near term.
Okay, that's the take on Grasim coming in from Kunal and the overall cement pack. But another stock that's doing very well in today's trading session is SRF on the back of some strong annual report takeaways that we've seen, strong management commentary coming in, wherein they have said that they are going to be pursuing both greenfield and brownfield opportunities for future expansion. Sharan, give us a chart check on SRF, given the fact that the stock is already up about 50% on a year-to-date basis. Any more legs for this stock to run up? Any more room for an upside here?
So definitely looking at the chart, once it makes a new all-time high, there is no high. You can reach at any level. You can go to 3,400, 3,600, even 4,000. Given the fact that there was a Niti Aayog report, especially on the chemical sector, and the company itself is doing very well, has seen very good order flows from the US at least. So I think fundamentals are definitely going to change in the next 2-3 quarters. On back of fundamentals, the stock is giving a higher high, almost at all-time high today. I think if it continues that way, it can easily reach levels of 3,400 to 3,600 in the coming months. So a very positive chart. If anyone has a position, I would suggest a hold. Definitely keep a stop loss around 50-day moving average, around 3,050 rupees. If it closes below that at any point of time, please take your stop loss and then you can review after 2 to 3 weeks. But overall, very positive on the technical outlook, and even the sector itself is doing very well. So overall, a very positive chart.
Well, a positive chart. That's the take on SRF. But look at Ola Electric as well. That's fallen now almost about 46% since its listing about a year ago. Having said that, the market does have its fair share of names which are also trading at their all-time highs. Hospitals, Laurus Labs has done very well. Max Healthcare is now sitting at an all-time peak. So look out for some of these names. And there's Fortis as well within that. I mean, who would have thought that there would be so many from the healthcare universe? So that's Max, Fortis, Apollo Hospitals, all of them sitting at an all-time peak in terms of the levels that they're currently quoting. Kunal, I mean, of course, the entire sector is doing very well, but do you think it will continue to be the case for Apollo Hospitals, for Max and Fortis?
Yeah, they would continue to be more like evergreen sectors because, historically also, so we have to analyze this in phases where, these sectors or how these sectors performed in the worst of the market conditions. That's from, say, September 2024 towards Feb, March 2025. And then in the phases post that, I think in both of those phases, at a point when the markets were going through a sharp correction, and then at a point when the markets start to show signs of recovery, when you see a consistent price performer or a sector or a group of stocks which do very well, we typically say that those are strong leadership sectors and they are the ones where the trend and the longer term trend is intact. Because there could be two stances. One is that buyers are not willing to give up their positions, and then the other space is that sellers are not willing to sell the stock at higher levels and they're still wanting to hold on to those names. So I believe in that aspect, many of the stocks in this space, Fortis, Apollo Hospital, these two stocks is where I track quite closely. I think both of the charts are looking quite strong. In fact, even for Apollo Hospital, I think just about last week or so, the stock gave a strong, I think, bullish pennant formation breakout, and I think post that we are looking at least a 500 to 700 point uptick into the stock price post that bullish pennant breakout. So I think that also indicates that when you see bullish patterns getting completed and stock prices adhering to those kind of key short-term support levels, the trend on the upside is intact.
All right, so that's the take coming in on some of these healthcare counters. But Narendra, the other pocket that is doing very well today is actually the whole tire space. Look at the move in Apollo Tires, Balkrishna, JK Tire, even Siet. These counters are anywhere up between 3 to 5%. And just a couple of days back as well, we have seen such similar moves coming in. What, as per you, is giving such momentum, or rather triggering such momentum in these counters? Is it because of compressed valuation, the raw material cost inflation coming down, and the better outlook for H2? What's your outlook on the tire companies?
I think it's mainly due to lower raw material cost coming down and markets anticipating it should be reflected in the earnings gradually. So that is playing a part, as well as because of higher raw material cost as well as lack of demand previously, the valuations have also suffered. So I think it's a mix of both. And the overall demand scenario is also expected to improve gradually going ahead, and especially in the second half. And once the trade deal done, then the global market also seems to be improving for the domestic companies. So I think it's a mix of these factors, and that's why the markets are reacting to it.
Okay, so that's the take on some of the tire counters. But Kunal, coming to you, we've had news flow on Eternal yesterday in terms of the top management rejig happening, and today too the stock is holding up well. What's the outlook going ahead on Eternal, given that we've seen very mixed moves coming in recently?
Yeah, I think there was a phase when the stock was extremely volatile post that results. I think 250 to 200 the stock, I think traded into this zone. I think 3-4 times. Just around that results or the reaction post results. But then post that, I think we've seen the moves settle up. I always believe that whenever the stock changes its behavior in terms of price trends, that's where new trends emerge for stock prices. So from being at a zone where the stock was extremely volatile, extremely high beta, it's now settling into a trend for itself. Now, potentially over the next 1 week, we can expect that there should be a golden crossover where the 50 DMA may cross back above its 200 moving average for Eternal as well Zomato. So I think in that sense, this should probably push up the stock prices further over the near to medium term. And this mild gradual uptrend which you're seeing into the stock price, the momentum should try and accelerate if we see that golden crossover happening into the stock price. So bullish on Eternal. The base which was formed at this 200 to 220 range, we've seen almost 3-4 tests to that kind of a range for the stock price, and demand originating for the stock at those lower levels. So which means now we are looking at a point where the stock should gradually continue to move up higher. The pace would intensify once we see those classic technical breakouts and the crossovers, etc.
Okay, that's the take coming in on Eternal, currently a gainer in trade. But Narendra, it's good to have you on the show. We'll let you go on that note. We're going to take a very quick break. It's pretty much status quo. The index hasn't moved anywhere, but let's see how the last lap of today's trade pans out.